All right, let's talk about nCino. After a pretty rough report last quarter, all eyes were on them, and boy, did they deliver. Today, we're going to break down their huge Q2 comeback and, more importantly, how their new AI-first approach is powering this whole thing.
Okay, the first thing you have to see is this. The stock popped almost 11% after hours. Now, that's not just a little, phew, we made it. No, that's the market roaring its approval. It tells you right away that something big is going on here, something way beyond just hitting the numbers. So you gotta ask, right? What was the fuel for that fire? What powered this huge rally? Well, it really comes down to two things. They're absolutely nailing their execution right now, and they're telling a super compelling story about what's coming next.
So first, let's get into the numbers, because this wasn't just hype. You know, the excitement was built on a solid foundation, a clean beat, right across the board.
Let's start with the bottom line. Non-GAAP EPS. Analysts were expecting 14 cents. nCino came in at 22 cents. That's an 8-cent beat. I mean, that's not just beating, that's crushing it. It shows they've got some serious discipline on the operations side.
And it wasn't just about saving money either. The top-line revenue was just as strong. They brought in $148.8 million. That's over $5.5 million more than expected. That tells you demand is really, really healthy.
Okay, but let's dig into these numbers a little more, because the quality of the growth is what's really interesting here. Look, subscription revenue, that's the sticky, recurring stuff you love to see, up a solid 15%. But check this out. Non-GAAP operating income is up 56%. That is some insane leverage. It means they're not just getting bigger, they're getting way more profitable for every new dollar they bring in. And on top of that, they're spitting out positive free cash flow. Just a beautiful picture. So yeah, the numbers look fantastic. But the how? That's the part of the story that has Wall Street really buzzing. It's all about their big strategic shift, this AI banking strategy. Let's unpack what that actually means.
Okay, so the heart of this whole thing is something they call platform pricing. Think about it like this. Instead of selling a bunch of different apps for your phone, they're selling one master subscription that does everything. They're moving their customers from buying individual tools to one big, unified platform. And here's the kicker. They're targeting a 10% price bump when customers renew, because those banks can now ditch other software and, more importantly, get access to all the new AI goodies. And this chart, this shows you exactly where they are on that journey. They've already moved over 21% of their contract value to this new model. That's a great start, right? It proves that customers are willing to make the switch. But the really exciting part? Look at that other 79%. That's the massive opportunity that's still on the table, just waiting to be tapped into.
And listen, this isn't just some PowerPoint fantasy. This strategy is winning them real deals, right now. We're talking big expansions with top-tier US and Canadian banks. They just landed their very first customer in Spain, which is huge for their European ambitions. And get this, a challenger bank in the UK jacked up their spending with nCino by over 80%. This is cold, hard proof that the market is buying what they're selling.
And this is the secret sauce right from the CEO's mouth. AI isn't just some fluffy buzzword they're throwing around. He's basically saying, look, AI comes up in every single conversation, and it's what's getting these deals across the finish line. It's the real differentiator, the hook, that's pulling everyone onto this new platform. So you put all that together, great numbers, a winning strategy, and what do you get? You get management feeling very, very confident about the future. And that brings us to their updated guidance.
And this is what you love to see as an analyst. They didn't just beat expectations for the quarter, they raised their forecast for the full year. Both revenue and EPS guidance are up. That's management planting a flag and telling the market, hey, Q2 wasn't a one-off. This is the new normal. The momentum is real.
And they've given investors a super clear roadmap of what to watch for. Think of it like this. In Q3, we'll get the first little clues about whether this pricing uplift is working. But then, Q4, that's the big one. That's when their largest group of customers is up for renewal, so it's the ultimate stress test for this new platform model. And then, the grand prize they're aiming for? Hitting the rule of 40 by the end of fiscal 27. That's the gold standard for top-tier software companies. It's a huge milestone.
All right, we've seen the numbers, we've seen the strategy, we've seen the road ahead. So let's put it all together. What's our final call on NCNO?
Here at Tall Kickers, we're putting an outperform rating on the stock. The narrative has completely shifted. This isn't just a recovery story anymore. This is a story about sustainable, AI-powered growth.
You've got the beat and raise, you've got a clear path with major catalysts. The whole package is just very compelling right now.
And just for fun, here's a trade idea that really captures this all-or-nothing moment. Let's call it the AI tidal wave. The whole idea is that the Q4 earnings report is going to be explosive, one way or another. So you could set up a long strangle. That means buying an out-of-the-money call and an out-of-the-money put that expire right after that Q4 report. Why? Because if they knock it out of the park and prove that pricing uplift is legit, the stock is going to the moon. But if they stumble, it's going to get hammered. You're not betting on a direction, you're betting on a massive move. It's a pure play on the volatility around this huge turning point for the company.
Now, as always, remember this is just our analysis. You have to do your own homework. This is not financial advice.